Welcome back, everybody. I hope you had a fantastic day, and we have a lot going on, a lot to talk about. So we'll jump right in, start with a little bit of a market recap today and bring you up to date on Wall Street. So the stock market Dow closed 1.5% down, 500 and something points. The S&P was down 1.8%, and the NASDAQ was down 2%. And this was all on the back of the inflation print. The CPI print came in higher than expected. So as we discussed yesterday, the markets have not fully priced in a rate hike yet out of the Fed. And today was just a reaction. A lot of it early on. The market sold off, pre-market sold off on opening after that CPI print. A lot of that was the automated algorithms that have if this, then what scenarios plugged in. So literally their programming says if the CPI comes in over a certain number, sell. So, and then it's reaction from that. Then it got bought up a little bit. We almost came back to even and then sold off into the close. So we are going to see a little bit of reaction, knee-jerk reaction, but the markets have not priced in a rate hike from the Fed yet. And why is that? Because the Fed hasn't done anything yet. They came out at the last meeting and said that they had a lot of room to raise rates, but they weren't going to do anything. They're still buying bonds. They're still doing QE. And they haven't done anything with the balance sheet. So what are we watching from here on out? We have until March 16th. So the Fed meets on March 16th. The next CPI print is on March the 10th. So we have the rest of this month. We have the first couple of weeks in March. If that CPI print March 10th comes out hot, like it did today or higher, with the Fed meeting on the 16th, we'll see a big drop that day. If it comes out lower, we'll see a little bit of a bump. But really, until the Fed comes out and actually decides to take action and give more clear, precise direction, we're not really going to have a severe reaction from the market. But if the Fed comes out and are heavy-handed against fighting inflation, where they're going to raise rates, they're going to start the taper and start reducing the balance sheet, they're really going to, the markets are really going to react then. The bonds were up, the 10-year was up over 2% today for the first time in forever, to 2.052% on the 10-year treasury. That affects interest rates in the real estate market. That affects interest rates for corporations. So the credit markets are going to take a little bit of a hit based on that. And we're going to start to see some reactions throughout the economy from that. And if bond rates continue to rise, that really puts the Fed in a tough spot in terms of reducing the balance sheet, because that is how the debt of the nation is financed. So it'll be interesting to watch, interesting times ahead. The crypto market reacted the same. Bitcoin, this is on the hourly now. Bitcoin is down from a high of 45,400 today down to that 44,000 level. Yesterday, we were in this range with the 44.3 where Bitcoin was encountering resistance that it had to get above to move higher. It got above until the CPI print, and it dropped off just like the rest of the markets did. So Bitcoin and crypto continue to follow the markets and continue to be affected by the markets. The good news for the long term of Bitcoin is when you think about adoption and all the news that's out there, there's a lot of great news out there. You're going to see a lot of ads in the Super Bowl, and this little pump that we've seen could be reaction to all the good news in crypto. The bump that we've been watching in crypto and Bitcoin here for the last couple of days, a lot of that could be reaction to all the good news that's out there in terms of all the different institutions and corporations that are adopting crypto. And the news stories are just one after another. Ubs Asset Management, we talked about UBS yesterday. They're one of the top 10 asset managers in the world. They are vetting a digital they're vetting hedge fund solutions and looking for an asset manager, crypto hedge fund manager, because they are a fund to fund. So they collect funds from life insurance companies, sovereign wealth funds, extremely high net worth individuals. And then what they do is they put that money with asset managers, with other hedge funds to invest on their behalf. So kind of like a Bernie Madoff, they're looking for a Bernie Madoff to invest with, obviously not a Ponzi scheme, but they want to find somebody to manage money for them. So they are vetting a crypto hedge fund manager. It's like we said yesterday, what's happening now, it used to be you had reputation risk if you were involved in crypto. Now your reputation risk as a company, as a fund, is if you're not involved in crypto. So all of the asset managers around the world are going to have to set up shop, and they're going to have to offer crypto products. But it just continues on from there. NFT, YouTube is doubling down on their NFT integration. Former JP Morgan executive named Algorand Foundation CEO. Remember I said, watch where the capital and the talent is going, and that will show you the future of where you need to be paying attention and looking for opportunities. Bringing blockchain infrastructure tech to Wall Street. So every day, more and more news about adoption, about growth in the space. Does that mean that's going to drive the price of Bitcoin to 100,000 to 500,000? Not necessarily. So there's a lot of different spaces for the capital to flow into. But when it comes to institutions like UBS, JP Morgan, BlackRock, Blackstone, companies like that, the big asset managers, they're going to primarily be looking to invest in Bitcoin and Ethereum, and maybe some of the top market cap coins, the top layer ones, is what they're going to be looking at, because those are perceived as safer, more stable bets. And they're going to dip their toe in. They're going to get into it slowly with maybe a 1% allocation and then go from there. But 1% of $100 trillion is a good little amount of capital to flow into the space. When will we see this happen? At the earliest, probably by the end of 2022, more likely Q1 2023, because there's a lot of infrastructure that needs to be put in place before they can just dive into the market. So let's take a look at the charts and talk a little bit about swing trading and day trading and some of the things that you need to be thinking about and the overall market. So one thing to understand is there are cycles, there are trends, and then there are movements within the trend, ranges within the trend. So the overall cycle of Bitcoin and crypto, as you know, has been traditionally running on the 4-year cycle. And the theory behind that was, or the growth behind the 4-year cycle, was that Bitcoin would halve every 4 years and reduce the amount of Bitcoin that could be mined every 4 years, which would drive demand, because the perception was that the supply was getting cut in half, being brought to the market. So people would rush in to buy it before the price goes up because of the demand, or the supply getting cut in half every 4 years. And ultimately, with a limited amount of only 21 million tokens, you have tokens that are now lost or just locked up and never going to be used. Brings that down to, who knows, 13, 14, 15 million, whatever that is. Maybe 19 million is the number. Nobody knows the exact number, or how much of those wallets will actually awaken at some point, or how much Bitcoin is actually lost, or people that have died and taken their keys with them. So we just don't know. But anyways, that was the whole reason why price would rise into the 4-year halving, was because of the retail driven network effect, thinking that they had to buy now before the supply got cut in half. And as we know, Bitcoin is very liquid. So there really is no limited supply from a practical standpoint. There is from a technical standpoint, but from a practical standpoint, there's always buyers and sellers. We have not reached a serious supply shock yet, where there's more demand than there is supply. So until that happens, price is going to fluctuate. It's going to be volatile. The more capital that comes in, the more stable the market will be. But when we talk about cycles, it's generally the 4-year cycle. When you talk about a trend, your trend is either up or your trend is down. And when you talk about ranges, that's what we're in right now. You have local ranges, and you have macro ranges and things like that. Right now, Bitcoin on the daily right here is in this local range here with a downtrend. And the macro range was this macro low to the macro high, that March 2020 low to the April 2021 high. And then we had the bottom here, June, July of 2021. And now we're in this range here, where we've had a little bit of an up, and now we've had this big downtrend. So when it comes to trading, one of the things you're going to want to do is understand downtrends are much more difficult to trade than an uptrend. On an uptrend, you can just buy every pullback and just kind of hold. And if you want to sell at the peak and then buy back, it's pretty straightforward, and you're almost not going to miss, especially when it's just going straight uphill like this. You can just buy, hold, wait till it hits whatever return threshold you want. But the thing that you have to think about is you have to do whatever is right for you based on your plans, based on your resources, your goals, your needs, and understand that the market does move in cycles. It does move in trends. And if you're buying in, and let's say you got in the last year somewhere around the peak or well above where we're at now, and your view is long-term, that's fine, but you need to understand that you did this for a reason. It's because you're going to have a need in the future. Maybe that need is retirement. Maybe that need is to buy a house or to pay for college or pay for weddings. Whatever your financial needs are, you entered this market for a reason. And at some point you're going to exit and you're going to liquidate. So you want to do that on your own terms. So you need to, what I mean by that is you're going to want to sell when you can sell at the price you want to sell, not when you have to sell at the price that you don't necessarily want to sell at. So you need to just make sure you have a plan for when you're going to take profits, for when you're going to take your original investment out, and for when you're going to exit completely. And nobody can tell you that. You have to figure that one out for yourself. And as price retraces, as we talked about, we were expecting to retrace into the 50s, somewhere around 50, 55 before we ultimately roll over, back check these lows, and then go off into a new cycle of a bull market. Right now, we are in more of a bearish consolidation range right now, where we expect price to come near this 50,000 level rollover. So as it gets back to 50,000 in that range, if it does, I'm not saying it absolutely will. Nobody knows for sure what this is going to do, especially given the economic environment, given the global environment with potential conflict on the horizon. Markets will react to that. But let's say it does get there. And that'll be a decision point for you. Do you want to sell when it gets there, or do you want to keep holding and waiting? So that's just, nobody can tell you that. You have to decide that for yourself, but you need to be prepared for that before we get there. And if you're trading, some of the biggest mistakes you see in trading, so there's day trading, and by definition, day trading is closing all your trades before the end of the day. So you could be trading on minute time frames, 5-minute time frames, 1-hour time frames, or the day. Crypto trades 24/7. So the day is whenever your day ends. So from a day trading standpoint in crypto, it just means that you're not carrying any trades overnight. A swing trade could be an overnight trade. It could be days, weeks, a month. Swing trades are generally longer term trades. So that's really the difference between a day trade and a swing trade. But either one, the day or the swing, what you're looking to do is buy low, sell high. So you want to buy the red and you want to sell the green. Now that sounds easy, and you think it would be easy, but what happens a lot of time, and here's the things where people will make a mistake. People sometimes want to buy right here after the price has already bounced. So where I like to buy is, and I watch these, and you have to be ready to jump in. So I like to buy. They say don't catch a falling knife. Well, you can tell the momentum on a downtrend and on a capitulation event when the market is just dropping and selling off, and there's momentum to the downside. You want to try to catch it somewhere around the area where it stops at the bottom. And then, generally if it's selling off and price is dropping, it's going to bounce around a little bit. So, once price drops, and it's had several of these drops, and you can see that these bounces are kind of weak. And I'm, when price is dropping like this, I'm watching this area here to see if it continues or to see if it kind of bounces a little bit and consolidates. So it dropped here, bounced a little bit, dropped again, dropped again. So I was just watching this area, and I see it consolidating in here. So I'm okay right here. In this area, I'm okay because it's risk reward. And this is just me. This is just how I do it. And I'm okay on any asset. We're just looking at Bitcoin right now. We can look at any asset, and this same thing applies. You have to be willing to jump in at the bottom after a big sell-off and evaluate your risk reward. So when you look at Bitcoin on something like that, I look back to right here, it was in that 34, 35,000 range. I was looking at the death cross scenario. So I had a pretty good feeling that 35, 36 was going to be the bottom. It wicked down to 33. And I was okay with that because it was just a wick. So that 35, 36 area would be a good place for a trade. Then the question is, when do you sell and how long do you hold it? And that's really up to you. And as you can see, just in Bitcoin alone, there's little bounces in this area, in this range of about 5%. If you held on to it for a little bit longer, you could get a 10, 12%. So it's really up to you in terms of what you're looking to make on a trade. And I'll give you an example, if you start with $1,000 and you make 10% on every trade that you do, and you just look at 10%, you can turn that into $1 million after 78 trades. If you compound, if you just reinvest everything. So if you start with 1,000, you make 10%, that's 1,100. You make 10% and then add from there, you just keep reinvesting and keep using that fund as you go. After 78 trades, making 10%, you'll have $1 million. If you start with 5, you'll have it after 50 something trades. If you start with 10,000, you'll have it after 30 something trades. So on and on. So that is the power of compounding your money on a trade and having the discipline to stay in. And where most people make a mistake in trading, and if you're a trader and you're a little bit behind or you're not doing well, it's probably because you're not patient enough. You're not patient enough on your entry, and you're not patient enough on your exit, and you get shaken out on the exit. So once you enter this trade, you got to be committed. And as long as you've calculated well, now you want to, you can set a stop loss below to make sure that you limit it downside if you're wrong, but you don't want to sell too soon when it's kind of shaken out here. Once it bounces around and you enter that trade at the bottom of that drop, you don't want to sell too soon. You want to let the trade work itself out. And then you don't want to be too greedy here. If you've hit your 10, 12, 15%, whatever you're targeting, go ahead and take your profit, let it drop, and then re-enter the trade and then do it again. So those are the things that you want to look at, and you can see how it works over and over. Now, Bitcoin is one that if you look at it on the daily and you're looking at ranges, you can have a multi-day range where you could have waited for the initial drop, and then that was about a 10% jump. Then there was the next big drop, bounced around a little bit, but ultimately it bounced from the range here, about 11%. This one has been a big one here since that $35,000 bottom. This overall from wick to wick's been about 30% right here. So these are multi-day trades, and you have to let this trade work itself out and set that number and say, hey, if you want to earn 10% a trade or 15%, then just let the trade work itself out and be ready for a little bit of a drop, and then understand what your risk reward is. So if you're entering Bitcoin at 35,000, we know the worst case scenario was that 29,000 range. And unless the market's just really going nuts, because now we know you need to watch the financial markets, you need to watch the macro, because those events do affect price. Show me the chart, I'll show you the news. Exactly. But if you know the news in advance, you can be prepared while you're watching the chart. So you want to stay in tune with macro events, what's going on in the economy, what's going on with inflation, what's going on with the Fed, all those types of things. And then price range levels of support and resistance. And that's where you can catch these falling knives. So when price is leaking and there's no support, you can generally, so like, how do you know where it's going to stop? So as price starts dropping, there's no real resistance or support in here. So it's going to drop down to that range right here where there was initial resistance. So that's generally the levels that price will drop to. So that's how you can be kind of comfortable that if price is dropping, it's going to kind of bounce and consolidate in this area a little bit, where you can catch about a 10% trade before it drops down to the next level and tests to see, is it going to continue on or is it going to drop down? And in this range right here was a range that there's a lot of major market structural support right here, where there's a lot of support buyers and a lot of resistance sellers to kind of prop price up and stop it in that area, where I was pretty comfortable that it's not going to go much lower than that. Now, I could have been wrong, and I would have sold at a point. And that's the other thing, is that you do need to have a point below your entry where you're comfortable selling and taking a loss if price kind of reverses and your idea is wrong. But generally on these trends, there's going to be a stopping point. It's going to fall to a point, stop, bounce around, it's going to rebound. Then it's going to do it again when you're in a downtrend until it completely reverses and you start putting in lower highs and higher lows on that trend. And right now we've got a couple of lower highs. We're looking for that lower low or higher low where price will reverse, put in the higher low, and then turn from there. So that's kind of what we're looking for now on Bitcoin. If you take another asset that moves a lot, let's look at Avalanche. Avalanche does a lot of dancing. And let's take a look at Avalanche right here. So Avalanche does a lot of jumping around, and let's look at it on the hourly. I mean, just today alone, Avalanche dropped. Let me see, that was, yeah, that's today. So Avalanche dropped down and recovered 10%. So there's 10, 11% right there in that move. There was no guarantee it wasn't going to go below there. And it could very well have dropped back to this range low here. but there was a lot of support right here. So that, that was a risky one there with the market doing what it was doing, but wasn't huge news, mostly, like I said, algorithms. But if you look at these little bounces here in Algorand, the key is, again, you don't want to buy the green where it's already started moving and it's up 5 or 10%. Now, there are some you're going to miss because some will continue, but you don't know which ones will. The best thing to do is wait for one that's already moved, whatever the coin is or asset that you're looking to invest in. After it's already made a move 10, 15%, then pulls back like this, go ahead and that's where you want to jump in. And then ride the trade 10, 15% and wait for it to pull back. Sell, wait for it to pull back. So in terms of day trading, swing trading, and it's easier to look at them on the 4-hour timeframes as well. You can see these levels of support and resistance in the range even better where price can drop to. But the thing about an asset like Algorand, let's look at it on the daily. So where you've got a lot of support and resistance through these levels here, but there's nothing below this level here, about $36. So if Algorand ever dropped down, as it's dropping here, I can see, okay, there's a lot of support and resistance here. So if I'm entering right here in this area, I can see that I've got a lot of support and resistance here. So I can feel confident that it's not going to drop through there without a bounce. Generally, what's going to happen is the asset is dropping. It's going to drop to the previous level of resistance as support and then bounce. And then if it's going to break, it'll turn and break through at that point. So almost always it'll bounce at that previous level of that was resistance. Resistance becomes support as the asset clears it. Sometimes it breaks right on through, so it's never a guarantee. So you always have to have, after your entry, you have to have a stop loss plan or a plan to sell if it doesn't hit your price. Let's look at Cardano. Cardano is another one where if it breaks this level here, there's not a lot of support below this level of 90. What is that? 90, 89, 90 cents. If it breaks below that, the next level is 30 something cents. So Cardano is one you have to be careful at this level because there's nothing else below it there. Same thing with Solana. Solana right now is in a major area where there's a little bit of support right here for this range, but if it breaks through the $66 range, next stop is down here in the $40 range. So this one here would be a tricky one where I would be less inclined to want to make a play on that one without a serious stop loss because there's nothing below support there. But up in this area here, there was plenty of support that I felt comfortable in. And I made a couple of moves on Solana on the way. I bought and sold it on the way up, bought and sold it a couple of times here on the way down on these bottoms. So you see that there's going to be some support here. So as price comes down, you have this area, this first area here where there's support. So as it dropped, little bounce, caught support again, bounced again, then it broke through, caught this area of support here, had a bounce. And these are not insignificant bounces. These are 25% bounces. So you can, catch, if you think about what I'm saying and think about 10% at a time, and this range here bounced 35%, you should certainly be able to catch a 10% in there somewhere. So that's how you have to think about it. Don't be too greedy. Don't try to get all of this move where, man, 36%, I want to get all of that. What you want to do is have, if you just think about 10%, you take $1,000, you make 78 trades at 10% a trade, you got $1 million. It kind of brings it into perspective. So, don't be greedy about it if you're trading, and look for those areas of support and resistance. Previous resistance becomes support, previous support becomes resistance. Those are the things that you want to look at. So that's kind of the way I approach trading from a swing trade standpoint and a day trade standpoint. And it just depends. If I'm looking for a certain percentage out of a move, it may take a day or two. It may take a week for that move to play out to get to where I'm trying to get to, or it could happen in a day. So that's kind of what I do. And I use Coinbase Pro. It's a free platform to use. The fees are minimal and you can set your stops and your limits. So I like to use that because I can enter the trade, set my goals, and then walk away, and it just takes care of itself. I don't have to worry about it. So those are the ways that I use. Those are the methods I use when I'm doing day trading or swing trading. And, when a market is ranging like it is right now, you can do very well. And then when you're in a bull market, you can just buy and hold on and just kind of wait for those moves. But the key is, if you're looking for an entry and an exit, just don't be greedy. Don't try to buy at the absolute bottom. Don't try to sell at the absolute top. just have a range of where you're trying to make a profit. Look for an asset that has enough of a margin in the moves that are moving 15, 20, 30% at a time to catch that 10% if that's what you're doing. So that's kind of how I do it. And you just have to figure out your method. It also helps to keep track of your moves and what you're doing in terms of when you're buying, when you're selling, and write down observations of what you're doing. And it kind of helps you understand a little bit better about how you're making decisions, and will help you make better decisions and help you make better wins. So I hope that helped you, and I will see you in the next video.